Good afternoon and welcome to this week's edition of Finweek Money Matters. Remember, this is the show that helps you manage your finances. I'm Dumisho Greater. Coming up on the show today, we will be talking to BMW about their move towards green power, and we'll be discussing the outlook for Nedbank. Then later on in the show, we'll be discussing platinum mine Lonmin's financial woes, and we'll be looking at the pros and cons of online share trading platforms. So we do have a lot lined up for you today. But before we get into all of that, do remember that we welcome your comments, so email us. You can send us your feedback to moneymatters@abn360.com. But first, let's take a look at the punt of the week. Despite a challenging environment for local banks, the major South African banks posted strong results for the first half of 2015. According to PwC's half-yearly analysis of South Africa's major banks, yet the banks' share prices tell a very different story, with Nedbank, Barclays, First Rand and Standard Bank lagging behind the JSE's all-share index year-to-date with a return of 6.67%. While I'm now joined by Moxima Gama to tell us her views on the shares of these particular banks right here in South Africa. Moxima, thanks for your time. Is this particular banking sector under pressure at the moment?
Look, it is under pressure, and it's for a number of reasons. The international rating agencies did downgrade the banks. We also have to take into perspective that the corporate loans or private sector loans have decreased, and that is the mainstay, or the part where banks get a lot of their earnings increase. And it's also just household disposable income, which has been at least chewed up quite a lot because of an increase in interest rates, which is then resulting in bad debts. So inevitably, if we have to put that into perspective, the banks are under pressure from that point of view.
And if we look at one particular bank, Nedbank, how is it faring at the moment?
Look, the share price has pulled back, and it hasn't been spared from that. There's been a bit of downside, which I need to just stress that it is a correction. Okay. It has kind of pulled back, but it's sentiment based because, as you had mentioned, that the results were pretty good. I mean, they reported last month, and they've increased. Headline earnings have increased by 15.7% to about 5.3 billion. So it's not just Nedbank, but the entire banking index, which has sound financial results. So the health of the companies are pretty good, but obviously all of this is pretty much sentiment driven.
Looking at their share price in August, they set about 271 rand per share. But like you said, it's been on a bit of a downward trend. Why is that? It's a correction, as I had mentioned, and the entire market has fallen, and it's pretty much herd mentality. So it fell alongside with the market, but you need to bear in mind that a lot of the banking index are still well within their bull trends. So in actual fact, such a pullback would be seen as a good buying opportunity. There is a lot of upside potential, I believe, and it's also just these international fears with the eurozone and them having those fears of a spiraling deflation and triple recession. I know you say that it's a correction, but do you think it's a fair representation of its performance currently if you look at the share price?
It is. Okay. I would believe it is. Despite the pullback, if you look at banks are now moving away from just being the day-to-day loans, giving out loans and credit to people, to being more innovative and looking at ways of attracting more clients. So they're in that competition, and they're getting into a different space than previously, seeing that there's a lack somewhere. So there is a lot of upside, I feel, in the medium term. Okay. And at this point, we're talking about Nedbank, but all the banking sectors do have some upside potential. I chose Nedbank in particular because it's actually broken out of a pattern. We saw the chart, technically now it's out of a falling wedge, which means there is at least 30 to 50% growth in the medium term. Yes. So I would strongly suggest buying on the dips. That makes sense, because there is this is all temporary, and it's all sentiment driven. Everyone is feeling it, but seemingly investors are keeping cash instead of being in the in stocks, and it will actually turn. It has fallen to a part where, in technical analysis, we should see a bit of a recovery coming through, and it's recovering all its losses at least next year. Okay,
so it will turn.
Yes,
it will turn. Yes. Thank you so much for that, Moxima. That was Moxima Gama, of course, telling us about our punt for the week. Next up, let's take a look at this week's cover story.